Namaste, Adilan. I'm here with Nariman Behravesh, the Chief Economist of IHS, to get some insight into what the global economy is going to look like in 2014. Dr. Behravesh, thank you very much for joining us.
Thank you.
First, simple, easy question. Is this going to be the year of a stable global recovery? And is it going to be an upward move, or are we simply bottoming out and that this year is going to be no big change at all?
Well, I think we bottomed out last year.
Okay.
And this year will be an improvement. Ironically, that improvement will be led by the developed world, the U.S., UK, Germany. These countries will do much better this year compared with last year. So, yes, it will be a better year.
This difference in the developed nations leading global growth this year, does that make you pessimistic about emerging markets? Does that sort of raise concerns? Because last year, emerging markets got hit pretty bad for a variety of reasons. Deficits, currency. So what's the outlook on EMs this year?
Well, I think emerging markets have a challenge ahead of them. I think they enjoyed a boom period. But I think now the next step is much more difficult. They have to be thinking about structural reforms, removing subsidies, making their economies more competitive, more productive. So in that sense, they have a challenge. They can meet that challenge. There's no question about it. But they have to do a lot of the hard work now.
So the easy growth is gone.
Exactly.
Within emerging markets, which countries are you more positive about? Where do you see the changes that you spoke about taking place, and therefore you feel the growth will pick up? For instance, in India, we've had a fairly rotten couple of years.
That's
growth
right.
has bottomed. And it looks like it might get better this year, but I'd like an objective external assessment.
I think some of the reason it will get better even for India this year is the global economy will be better. So if nothing else, exports will be an engine of growth. But I think in terms of countries that are either talking about reforms seriously or doing reforms, I'd certainly say China. China's at least got a reform plan. We'll see if they implement it. Mexico is another one where they're beginning to seriously look at reforms. I think it's a little tougher in India and Brazil because of elections coming up, so I don't expect anything until sort of after the election. So It's a little different.
What are the companies that you speak with telling you? I think a couple of the questions we've been asking business leaders here in Davos is, well, it's going to be a year of recovery, but is it going to be a year that makes you feel confident enough to put money back to work? And the responses to that are fairly mixed. Most of them are still very cautious about getting or participating in the investment cycle.
And I think the reason for that is caution, continued caution, is they've been burned in the past. Everybody kept predicting that the next year would be a strong recovery, and of course it didn't quite work out that way. We're certainly more confident that there will be a recovery this year and that we will see those kinds of investments.
But is that, is it anecdotally what business leaders are telling you, that they're going to put large amounts of money back to work? For instance, the FT leader piece this morning on the papers is some $387 billion in cash piles amongst just 5 large American companies. The question is, when do they start investing all of that?
Well, I think a lot of them and the shareholders, a lot of these companies want to see some top-line growth. And the only way you're going to get top-line growth going forward is to invest, is to take some risks, is to make some bets, as it were. And so I'm fairly confident. And in terms of what we're hearing from our customers, fairly confident we'll see that. Maybe not as much as we'd like to see it, but there will be more.
You spoke of China. There are mixed views about China as well. George Soros has identified China as problem number 1. I was speaking with Martin Sorrell earlier, and he said it's opportunity number 1. Where do you stand in this debate on China for 2014?
I think there are huge opportunities in China. There's no question about it. In many markets, for example, the automotive market, even if China is only growing 7%, the automotive market is going to grow because the penetration right now is so slow. So I think there are huge opportunities in China. The big worry is China going to be able to tackle some of its structural issues in terms of the credit bubble, in terms of housing? I think they will. China has a good history in doing this, but we don't fully know that. It's still a little uncertain about exactly how they're going to do it.
Well, it's impossible to talk about 2014 without referring to the taper. It began, or it has begun, in January, and I'm not sure what your assessment is of what the momentum of the taper will be, given that we have a new Fed chief taking over. Where do you stand in this taper debate? Are we going to see the end of quantitative easing by this year, which is that all additional bond buying stops, or do you think it could spill over into 2015?
We think the taper will go through this year, but by the end of this year, they won't be buying any more bonds. So in that sense, quantitative easing will end
cut all $85 billion
by the end of this year. On the other hand, I don't see that as having a big problem and a big impact on the emerging world, because in a way we've already seen that. What's interesting is when they actually started to taper, markets didn't really react, unlike when they announced that they were going to do the taper, when markets were very unhappy. So I think going forward, we'll see the tapering continue through the end of the year, but the effects I don't think will be that horrific.
But if you stop pumping in $85 billion a month, what does that mean for all the liquidity that's been fueling stock markets across the world? I mean, even in India with the dismal economic outlook that we've had, a few months ago we saw all-time highs in the equity markets. We've seen that take place in the US, we've seen that take place in Western Europe. So what is this pullback in liquidity going to mean?
I think asset markets will struggle, including the stock market. I don't see a collapse in stock prices, but we're certainly not going to see what we saw last year. No way. I mean, I just don't see it. We might see some small advances in most stock indexes, but it'll be quite small compared with last year.
Where are you calling the U.S. 10-year yield? If all bond buying is going to end by this year, will we be between closer to 4% or even higher than that by the end of this year?
Well, it's interesting about bond markets. They anticipate. And so, in a sense, markets have already anticipated that rise. So while they'll go up a little bit, no question, I don't think they're going to shoot up because markets have already sort of discounted it. They've already factored it in.
Okay, and what does this mean for currencies? Again, last year we saw some incredible strength in the euro. I'm not sure if that's going to continue this year. So that sort of feeds into your assessment of the strength of the European recovery and dollar dominance, given that if all tapering is going to end by this year, then that should mean a very strong position for the dollar.
That's right. I think the dollar will probably appreciate against most currencies this year. It's not going to be quite what it was last year. Again, there won't be that shock effect. But certainly relative to the euro, I would expect the dollar to rise for any number of reasons. Tapering is one of them. The other is the U.S. will grow faster than Europe.
Are you sure about that? The last jobs data we saw was fairly dismal. I'm not saying that 1 month can change the outlook entirely, but it does look like it might be a very choppy recovery.
I think it's always going to be a little choppy, but the advice I've been giving to most people is ignore that jobs data that we saw for December. I suspect the January numbers will look better, quite a bit better. And
that means that the Fed will stay on course, cutting about $10 billion or more, over a few months every month.
Exactly. And if you look at the other kinds of data, unemployment insurance claims, the survey data, they're all suggesting the job market should be strong. So that weak jobs number was a real anomaly.
Now, Dr. Behravesh, if the U.S. is going to be this pillar of growth this year, that makes countries like India nervous, right? Because we're now competing with the best in the class. And we're not just competing amongst emerging markets, but we're competing for both portfolio flows as well as foreign direct investment with the United States of America. What is your outlook on India, where it stands today with both its internal domestic issues on the fiscal deficit front, the current account deficit, and its ability to attract investment, to bridge all those deficits through the course of 2014?
I think there are a lot of businesses that are very interested in India. India has huge potential in terms of the rate of urbanization, in terms of the rate of development. I think India needs to do a lot in terms of making investment attractive through, again, reforms, through tax policies and so on. So there's no reason why India should suffer because the U.S. is doing well. I think there's lots of opportunities in India, but I think a favorable investment environment, or creating a favorable investment environment, to me is one of the top priorities for India.
All right, so my final question is, what are you looking most forward to here in Davos over the course of the next few days?
Well, I think just to get a sense of our views about the U.S. economy and Europe, other people's views. It's a way to validate. So far, so good. I think most people are sharing our views. But if we said something and the prevailing view in Davos was very different, we'd have to perhaps rethink our views. But that's not going to happen, I don't think.
All right. Thank you so much for your time. A pleasure meeting with you. Thank you for speaking to